Good afternoon, everybody, and thank you guys so much for joining us. I'm Anthony Bullen. I'm the owner and broker of The Collective, and we're so happy to have you here today. Our mission at The Collective is to help you create a path to wealth through real estate. We all understand that real estate in this country is the #1 way to build wealth, and there's so many different ways to do it. And becoming a home buyer, and maybe a first-time home buyer, this is a first step. So the first step in the process is all about education and just exploring and figuring out, can I purchase? When can I purchase? What do I need to do to make that first step happen to me? What do I need to do to achieve the American dream of owning a home and starting to build my own wealth rather than my landlord's wealth? And that's what today is all about. It's going to be a quick introduction, 60 minutes Q&A with a couple of LA's very, very best lenders. We'll get to hear from some realtors. And if you have any questions as well, please feel free to put them in the chat or raise your hand and we'll be able to get to you for there as well. We're very passionate about education at The Collective, and if you're interested in learning any more, we have a pretty robust YouTube page that we've built out. You can go just search The Collective Realty on YouTube and you'll find all of our videos there. Also on our website, The Collective Realty, we have some of our most popular ones that are hosted there. Also, we have a whole nother section of videos for realtors about education and another section for anyone who's interested in multifamily and becoming a real estate investor. We have tons of information and videos on that as well. So today is our home buyer seminar, and this is for anyone who's a first-time buyer or experienced buyer. The market's always changing, the lending programs are changing, hot areas are changing. I mean, today we're even going to talk for a minute about Bitcoin and cryptocurrencies and how that's working with purchasing homes. So it's an evolving process, and we're just glad that you're here to learn with us. So, like I said, we have a couple of the best lenders here today, and we want to really dispel some of the big myths. One of the biggest myths is that, some things that we're going to be touching on is down payment options. Many people think that you have to have 20% down to purchase a home, and we know that that's just simply not true. We just had an amazing class learning all about millennials and the purchasing power of millennials at this point. Millennials are actually going to be the #1 buyer in the home buying market in 2022. So there'll be more millennials purchasing homes than any other age demographic. And most millennials think that you need, or about half of the millennials that they surveyed think that you need 20% down to purchase a home. When in reality, about 50% of the millennials that were purchasing homes actually were purchasing a home between 0 and 5% down. So there are so many different programs out there, and we're going to explore some of those different options and let you know about that as well. We're going to touch on credit to debt income ratios, down payment options, special programs with FHA and different programs that the government's offering, and how you can put as little as 3.5% down when buying a duplex or a fourplex. So stay tuned, we'll get into all of that. We'll talk about some of the hottest neighborhoods, and we have a bunch of realtors that are on the call too. So any of the realtors that are out there at any point during this seminar, please feel free to raise your hand, and I would love to get your opinions and get you involved in any of our topics as well. We're going to talk about how to get your offer accepted. A lot of people think, do I have to have cash to get an offer accepted right now? And we'll talk about some of the strategies on getting a non-cash offer accepted. We'll talk about the escrow process and inspections and what that looks like, give you an overview of that. How much does that cost? What do you need to be, how much cash do you need to have to be prepared for the inspections and closing costs and things like that. Appraisals are questions that come up. We're going to be talking about appraisals and what that looks like, and what if your property doesn't appraise, what happens then. Please raise your hand with any questions. If you're watching this at home and you're not live, just reach out to us after, and we're happy to help you understand any questions that you might have that might come up. Like I mentioned, we know that building wealth in this country, the #1 way to do that is through real estate. And this is the first step on getting on that path. So congratulations on being here. And You know, if any of you guys are here, why don't you guys type in the chat right now some of the reasons why you think that it may be better to own a property than to rent. And let's talk about that for a little bit. So why do you think it's, you know, it's more strategic, it's better for your financial future to own a property versus rent? What are some of those benefits? All right, let me pull up my chat. Lucas says, stop wasting money and start building wealth. Absolutely. I mean, building, you're always going to be spending money to live, right? So you're either spending money and building your landlord's wealth, or you're spending money and building your own wealth. And by the way, at some point when you have a mortgage, you do pay that off. You know, typically it's in 30 years. And after 30 years, you may not have a mortgage anymore. You'll simply be paying your property taxes and the cost to maintain that structure. So with rents, rent prices are always going up. Even if you're in rent control, they can still increase it 3, 4, 5% a year. Your payments are always going up. When you have a mortgage, they stay the same. And at some point, like for me this last year, I was able to refinance, and my mortgage payment that I've had for quite a while actually went down by like a third. So that was kind of exciting. What else we have? Your rent is only helping your landlord and your property owner's wealth. Absolutely. You know, when you're paying rent, it's just burning money. You're just literally giving it to someone and burning that money. When you own a property, you're putting some of that money, think of it as you're putting some of that money into a savings account, because it's going to pay off some of that principal that you earn. So it's like paying a forced savings account. Some of that money that you're paying, you're going to get a tax write-off for, so you're going to get an extra benefit from that. I mean, we all know home prices are always going up, and there's appreciation. That's like an added bonus as well. Another way to build wealth through owning a home. So, you know, pretty much every dollar that you're spending when you're purchasing a home and you're spending on your mortgage is a positive dollar. You're either getting a tax write-off, or you're going to get that money back when you sell your property. When you're renting, it's completely burning your money. So they're very, very different concepts. Marty's saying no landlord, right? When you own, you can paint your walls when you want to, any color that you want to. I mean, even when you have a condo, you can paint and do whatever you want on the inside pretty much. There's not too many restrictions. Stability of payment for 30 years. Yeah, I mean, anybody else have anything else they want to say? Any other ideas why renting and owning a home is so much more powerful for your financial future than renting? Okay, well, let's just keep on moving right down our list here. So a lot of people are asking like timing, right? Like, okay, we get it. Owning is better than renting, but you know, is now the right time to do that? I heard the market might crash in a year from now. What's going to happen with the market going forward? And if anybody out there would like to chime in as far as, you know, their opinions on what may happen in the market moving forward, please do. I can tell you that all of the economists that I've been studying and reading about, and that California Association of Realtors has reached out to, they all anticipate for the state, actually, that this year, they're going to anticipate the year closing with prices rising again by the end of 2022 by another about 5%. Last year, in many areas, they went up between 15 to 20%, which is much higher than average. So we expect things to cool off, but continue to go up. So with prices rising, it may be more expensive to purchase next year than it will be this year. The longer you wait, the more expensive it may be. Another factor we have to consider for timing is interest rates. You know, we don't have a crystal ball. We don't know what's going to happen for sure, but everyone that I've talked to has, you know, pretty high faith that interest rates are going to be continuing to rise. We've already seen a jump in interest rates just, you know, in January, and we expect that to continue to increase as the year goes on a little bit. So nothing too substantial, right? But enough to make it a little more expensive at the end of the year than it will be now. So, you know, finding out when you can get on that path to purchase will make a difference. And probably, I mean, I would say if you're buying, the sooner you can buy this year, most likely it's going to be less expensive. It'll be, not as expensive as it will be later down the road. Now, if you need to save and you don't have quite enough down payment yet, you got to do what you got to do to get into purchasing a home. You may need to wait a year or 2 or 3 years, but that's okay. Just get on that path for yourself to figuring that part out, because the longer you wait, typically the more expensive it tends to get. The one regret that some of my clients have when purchasing a home is they wish they bought sooner. They're like, I wish I bought sooner. I thought about it. I always was hemming and hawing, and I made excuses, and I wish I did it. I wish I did it sooner. A lot of my clients also will say that, that first couple of years of owning a home, it can be a little financially challenging. Things are a little tighter. You have to make a little bit different decisions. If you're in California, and especially in Los Angeles, the market, it is a little tight to own a home, but it gets easier as the years goes on. And it gets a lot easier as 5 years go by, 10 years go by, things change. So keep the faith that those first few years you have more expensive. You're maybe buying new furniture, you're maybe doing some repairs, and money's a little bit tighter. But as the years go on, it tends to become a little bit less stressful financially for doing that. And you can see, when you look at your mortgage statement, you're like, okay, I only owe this amount now. I've actually paid off $25,000 in the first 5 years of owning my property. I have that as equity now. I would have not had that if I hadn't have purchased a home. Another study that shows this is an average across the country when they compare homeowners to renters who are making the same amount of income. So the same kind of income level, someone who is a renter versus someone who's a homeowner, and say the income level is 75,000. I'm just on average, somewhere around there. That when you own a home, the average when you rent, your average wealth that you have kind of built up in savings in your bank account is around $2,000. That's kind of the average. For someone who owns a property, after 10 years, their average net worth is $200,000. So it's a huge difference. Just the only difference between these two people is one of them decided to purchase a home and the other one decided to rent. Their income levels are the same. It's just proof that over time you are going to be building wealth through home ownership. So it's just something that that we all have to kind of figure out how to do and when we can do that. So hopefully sooner than later for all of you who are on this call. That's my wish for you. All right, well, why don't let's see. We're going to talk for a moment about credit, and I'm going to bring on our two lenders. We have Carlos. Let's see if I can spotlight you. And Carlos is from Loan Depot, and Marty from Arcstone Financial. The two of the smartest lenders that we have in our city. They're so amazing, so helpful, so patient. And are just an amazing resource. We're going to touch on credit for a moment. Not going to go too much into credit. We do have a full 30-minute in-depth seminar on credit and how your credit is made up and how to improve your credit, and everything you want to know about credit and home ownership on our YouTube page. So I would recommend highly, if your credit is not the best right now, if it's not over 700, you might want to take a look at that video. Just search the Collective Realty and you can find the credit repair or credit info video that's on there. So all right, let me get my list of questions here. So Marty, Carlos, would you guys like to introduce yourself briefly? Carlos?
Yep, my name is Carlos Ortiz. I'm branch manager here with Loan Depot. Hello, everyone. My office is here in Los Angeles. I personally have been making home loans and helping customers achieve the dream of home ownership for the last 17 years.
And tell us, briefly, what makes up your credit score? Are student loans a part of that? Do they affect it? We always hear that question.
Correct. So the makeup of the credit score is a combination of a number of things. The three types of credit that we typically will see is mortgages, installments, which are typical of if you have an auto loan or lease. Installment loans also are student loans, and then revolving credit, which is more credit card types. Those three help make up the FICO score, as we call it, or credit score. And then they fall into different buckets. We always look at, the time that the actual account has been open, the better the rating, making sure we have no lates, rated based off of 30 days, 60 days, and 90 days. We also look at, or the credit score system will look at your balance, your available balance to the balance that you owe as a ratio that has some determination there. Hard credit pulls will also impact the credit score. So are you applying for credit at different lenders at various times, right? So want to make sure that you keep that bundled up and localized. So when you're actually shopping for the best rate, best lender, those are some of the factors that play into the credit score.
What doesn't affect your credit?
So things like your auto insurance, things that you're paying, maybe when you're paying rent as an example, doesn't impact your credit. Now, if you fell behind with your landlord, maybe they would report you to collections. That would impact your credit score. But things that we pay for on a consistent basis at home, our LA water and power bills, as an example, don't report to the credit report, gas bills, things like that.
Okay,
those don't impact the credit score.
What's the best way to find out what your credit score is?
There's various sites, but the freecreditreport.com is the best way to gauge where you fall as far as a credit score. You are provided a free credit report annually. So by putting in your information there, you can get a copy of your credit report, or both Marty and I would be happy to provide you with the free credit report as well.
Awesome. And Marty, welcome. Would you like to introduce yourself?
Hi, everyone. I'm Marty Carey, and I have been lending for 28 years, and I am the president of Archstone Financial. And much like, both Carlos and I, we're very passionate about what we do. It's very important for us to make sure that we educate the buyers of what programs are available and how to, get the best programs out there and get them into a home versus renting. And like we discussed earlier, not to waste money and give it to somebody else, basically. So we're always looking out for your best interest and making sure that we give you the best advice.
Awesome. So I'm sure everyone on the call is wondering, well, what credit score do you need to have to buy a home? Like, how would you answer that, Marty?
So it varies, right? So credit scores could go down to 580 credit score, even lower sometimes, but you could go to 580 credit score to qualify for an FHA loan. But generally, you want to get your credit scores in the 680 or above, because those are the rates. That's where you're going to get the best rates and best terms possible. So any advice that we give you to make sure that how to get your scores up higher would be something that we'd want to do, because it's only going to benefit you to make sure that you get the lowest rates and the best terms.
Absolutely. And I would invite anyone on the call to reach out to Marty and Carlos after to find out if you don't know what your credit score is. And that's kind of one of the first steps of getting on that path, because it may be possible. I've had clients who are at a kind of a threshold credit mark, and Marty said, you know what, if you can get your score up 10 more points, we can get you a little better rate and save you a little money. Why don't we wait another 2 months and see if we can do that? And then they're able to do that. So sometimes people are on a threshold where it makes a difference, sometimes they're not, but it's definitely something that you need to talk to the lender about to find out if that matters for you. And you won't know that unless they pull your credit, and it's okay if they pull it. So that could be a first step for some of you to do. Okay, so Carlos, let's talk a little bit about the myth that I talked about, down payment programs. Tell us a few different down payment programs. Most people think you need 20%, but you don't. What do you see a lot of people using, and what are some options out there?
Absolutely. So, specific to California, there's specific down payment assistance programs, namely the GSFA, which is the Golden State Financial Authority. There's also CalHFA, all of which offer either down payment or some kind of combination of closing cost assistance. With those particular programs, you're looking at putting a minimum of sometimes 1%, maybe 2% down, if that. There's just the general programs out there. I'm sure a lot of you have heard of FHA, which the minimum down payment there could be 3.5% or 3.5%, Also take into consideration too that gift funds are something that are available for down payment. So if you have family members, mom, dad, brother, sister that are also willing to help with down payment, that can be assistance as well. So there's various combinations that we can do. But as far as like the myth buster, you do not need 20% down to get yourself into a home.
One thing people might not be aware of too, I've been getting a lot into TikTok, and one of the big trends on TikTok that people are talking about is house hacking. And part of that, what they mean by that is that you have other people that live with you to help pay for your rent. So maybe you buy a 3-bedroom condo and you rent out 2 rooms and you're collecting rent from them and you're able to build wealth at a faster rate. Another way, if you don't want an actual roommate, is maybe using an FHA loan to buy a duplex or triplex. Like, Marty, do you want to touch on that for a moment? Like, what does that mean? Like, how much you have to put down and how does that work?
So with most more traditional conventional transactions, you'd have to put a little bit more money down on duplexes and triplexes, or even fourplexes. But with FHA, you could go as little as 3.5% down up to 4 units, which is crazy unheard of. And I mean, it makes obviously, or especially in duplexes, without going to the details of 3-unit and 4-unit FHA requirements, duplexes are great because you can obviously put 3.5% down, get 2 homes for the price of 1.5, I think, something like that. So
that's what it seems like, yeah.
Yeah. So, and just basically have somebody pay for a big portion of your rents. Like, for example, I have, especially with ADUs now, we'll talk about that in a minute, but I have a client right now who is buying a property and the property has an ADU, and she's renting out because rents are so high, she's renting out the ADU for $2,500, and the house itself payments are $3,500. So she'll be living at the house for $1,000 payments. I mean, that's amazing. You can't even get rents for $1,000 a month, much less than in a house. So it's very similar to duplex, where ADUs are, something prevalent in Los Angeles at the moment. But you could definitely do that when you have your housing payment very, very low.
Yeah, no, that's pretty awesome. Do you, I know that the limits are always changing. The duplex limit, like what can you purchase a duplex for and still use an FHA loan? Up to what price?
For duplexes, okay, so for duplexes, the loan amounts in Los Angeles County are, they go up to $1,243,000. That's a huge loan amount that you could get for a duplex. Triplex is 1.5 million. I mean, I'm giving you rounded numbers because they're very specific and odd. And then about 1.8 million for a fourplex. It's crazy amounts where you could put 3.5% down and get such big dollars. Traditionally, those dollars were considered jumbo, and you had to put 20-25% down before you wouldn't be able to get a loan otherwise. So it's definitely accessible.
Yeah. And again, you need to live in one of the units. So keep that in mind. It's not for an investor to use, but you become an investor once you buy something like that. So Carlos, let everybody know as well, what are some of the costs besides the mortgage? We have a mortgage calculator on our website, everybody does, but there's other costs besides the mortgage. So we always hear PITI. So what are some things that buyers should be aware of besides just the mortgage?
Yeah, absolutely. So PITI stands for principal and interest, taxes, and insurance. So it's important to know that as a homeowner, you're going to be responsible for the yearly property taxes that can be embedded in your monthly payment. As an example, FHA requires that you have your monthly taxes and your monthly insurance included in your payment, just from a budgetary perspective, to ensure that you don't get hit with any large bills at the end of the year. Anthony, you had discussed that in the first few years that you are a new homeowner, things change, right? Or residual income kind of shifts because we have to focus on making that mortgage payment, and it gets easier over time. Well, having this PITI payment, or the principal, interest, taxes, and insurance payment, ensures that you're able to make your taxes and insurance payment on a monthly basis, so you don't have to pay them annually.
Got it. That's what I do on my mortgage. I'm like, I just want to have a monthly payment. I don't want to pay my taxes at the end of the year. Let's just roll it all into one, and it makes budgeting a lot easier. Yeah. Okay. I'm not sure if you guys have these numbers, but the next couple of questions, just kind of looking for examples of what some payments might be. Like, so say, for example, someone is purchasing a $750,000 home, and they're putting 10% down. approximately what does a payment look like for that, including property taxes? So if they're going to wrap it all in one. So maybe take a look at that. And then also, what is say a $500,000 condo with 300,000 HOA dues, same thing, 10% down, about what are payments like for that? Do you guys need a couple minutes for that?
Yeah.
I can take the 750, Marty, and then you help me out with the 500,000.
Sure, of course.
Okay.
Awesome.
So
yeah. Perfect. Go ahead if you know.
So I had broke down a $750,000 purchase. And one thing that's really important to discuss, team, is that rates right now, they are increasing. So it's important to have those discussions early on, maybe build a little bit of a buffer when it comes to your pre-approval, just so you have a little latitude there if the market happens to change. So I'm discussing a rate between 4%, 4.5% on 750,000, putting that 3.5% down. Again, there was some assistance that can be helped with. You're probably looking at a payment of roughly $4,450 a month. That's inclusive of your principal, interest, taxes, and insurance, like we just discussed. So imagine if you're paying $4,500 a month in rent, you could be buying an equivalent home of up to $750,000, putting 10% down.
10% down. Got it.
So did you want the $500,000 to be at 3.5% down or 10% down?
Let's do 3.5% down. Let's make it an FHA.
Okay,
yeah.
Great. So we'll make this into an FHA loan, and let's go ahead and tell you the rates from that is going to be that. And I would think $500,000 would be a condo, maybe, or no?
Yeah, we're going to get a 1-bedroom condo or studio.
Okay, so condo is going to be a little bit different. We're going to have this thing called a homeowners association, as you discussed earlier. So, and they range somewhere around generally $280 to $450, somewhere around there. So let's just maybe pick $400 a month for payments, for homeowners association payments. So if we do that, your principal and interest payments will be $2,166. And then you're going to have a mortgage insurance on this property I don't know if we wanted me to discuss the mortgage insurance, but mortgage insurance is part of what, if you put anything less than 20% down anywhere in the United States, you would have mortgage insurance, whether it's financed in your payment or whether you pay it on a monthly basis. So you could do it any which way, but with FHA, you have to pay it on a monthly basis. And in this case, it would be at payment of, let's see here, your mortgage insurance. I apologize, guys. Let me just put one thing here. All right, mortgage insurance. I shouldn't have done that. Let's see here.
If any of you want to kind of just get a rough idea, on our website at the Collective Realty, you can type in your loan amount, your interest rate amount. I would say interest rate amount, if you're going to plug into loan calculators right now, put in, what do you think, 3.5%, higher? What do you guys recommend?
I'd say probably like 3.75 is probably a good safe number to put right now because it's on an upward trajectory. So probably just to be on the safe side.
All right, so 3.75 if you use any loan calculators, and then you could put in your own down payment and your own purchase price and kind of get an idea of some examples of different payments. And then to get all the details, you got to talk to Marty, you got to talk to Carlos to figure that out. And there's so many different options out there. If anyone's a doctor out there, right, Marty, we have a program 0% down that you can do. So if you can afford the mortgage, but not the down payment, there's programs for that. So you never know what's out there. You just got to talk to one of the lenders and really find out for your own service.
I have a question on this, actually. Sorry, Marty. I wanted to just be back on this. If we had a client that is a doctor and wants to offload 2 properties and buy a third, would you recommend using this program to first actually start the process, get into escrow to buy the property, and then sell the other 2 properties? I know this is unconventional. I don't necessarily recommend it, but I just wanted to hear from you guys. What do you guys think?
So you're asking if a doctor should use this program, the 100% financing program, buying their first home? Is that what you're asking?
it's not going to be his first home, but can he utilize this as a non-contingent? We're trying to avoid the contingency on an offer by having this, let's say, this loan.
I
I
think
wouldn't,
I know
I
it's a
wouldn't
little
recommend that.
confusing. Yeah. Okay.
I wouldn't recommend doing the 100% financing because I think most sellers are going to be very turned off by that. So, and they don't have the thought process behind it. So of, people not putting money down. There's a lot of myths out there. Unfortunately,
Sure.
they think that, because not every lender can perform. That's the other thing, right?
course.
Carlos and I are very experienced, but not every lender performs, and they create a mythical situation for a lot of other people. So yes, I wouldn't recommend that. But I wanted to also just let you guys know that $500,000 payment, a purchase with 3.5% down, all inclusive, without getting into the details of the breakdown, you're looking at about a $3,500, $3,497. That would include a $400 homeowners association fee in there as well too. So
and your property taxes.
that includes your property taxes, your insurance, because you have to have homeowners insurance on your condo as well too. And then it also involves your mortgage insurance, which is something that you have to have anytime you put less than 20% down.
So basically that's 3.5% down, at 5,000. So say if you can save $20,000, that's a little bit more attainable to save $20,000 than thinking I need to save 20% and save $100,000. This is something that, may be an option for some of the people out there listening. So, all right, well, let's move on. Do we have Yale on the call here? Thank you, Carlos and Marty. We'll get back to you at the end with a few more questions as well.
Hi.
Hello, Yale. Where are you? I'm going to spotlight you. All right. So, when you guys are starting out with the process, you need to plan ahead and you need to be realistic. This is Yale, one of our agents, who's going to give us a little example of what he recommends to his clients.
All right. Well, thank you, Anthony and Marshall, for letting me jump on. Sorry, my background is so dark. I thought it was well lit, and then the sun is going down. So, but yeah, to follow up with both of the fabulous lenders, Marty and Carlos, it really is about being proactive versus reactive. I have a few friends and clients right now that I'm working with, and they will go out to open houses now that open houses are back, thankfully. And they'll look at homes that really aren't within their budget, or maybe they're looking at condos or homes that are lower than what they can actually purchase for. Of course, we don't all want to put our eggs in one basket. We don't want to drain all of our accounts just to buy a home. But I think really just setting realistic goals, being proactive versus reactive, as I mentioned, is so important. Like Anthony said, get pre-approved, be realistic what you can afford, talk to Carlos, Marty, a lender maybe that a friend has used, and really just make sure that how much money you need to have up front. Do you qualify for FHA, which is 3.5% down, which to me is still shocking that they allow those loans. It's amazing. And I will say, just, be in contact with the lender and pick a lender that can be reachable on the weekends. So us agents, if we want to write an offer and in a competitive market, we don't want to have to wait till Monday morning at 9 a.m. when the banker walks into the bank and sits at his desk, opens his computer and starts checking his email. You want to make sure that the lender is reachable. They can edit your lender letter that qualifies you. Because if you're going to offer $350 on a listing that's $375, but really you can go up to $400, you don't want the letter saying you can go up to $400. That's just not smart negotiating. So I can't stress enough how important it is just to be realistic in what you can afford. And then it makes it so much easier to go out there and search and to have your realtor set up an MLS search for you, because then you're not getting listings ranging from 500,000 to 2.5 million. You're actually getting listings and you're looking, within what you can afford.
Awesome.
Yeah.
Very good advice. Thank you, sir.
Yeah.
All right, we're moving on now to a new section to our home buyer seminar. Have you heard about cryptocurrencies and Bitcoin and real estate? Yeah, people are talking about it like crazy now. Sellers are saying, "Can I sell my home just to someone who wants to buy it with crypto?" How the heck does that work? Is that right? Anyway, we have one of our specialists here with us, Brian Dana, who is a part of the collective. I'm going to spotlight you, and why don't we do a screen share and talk to us for a minute about crypto and real estate.
Sure. Yeah. Hi, guys. So basically, I mean, I think 2017 or so was the first time home was bought with crypto, but especially in the last 2 years, since cryptocurrencies have gone up so much in value. I mean, if you owned Bitcoin 2 years ago, it's up like 7,000%. So there's a lot of people, especially a younger generation, who are sitting on a lot of Bitcoin or other cryptocurrencies that have a lot of value, and they might want to put it into something like real estate that's less volatile. So I'm basically just going to go over, how you can use, as a buyer, how you can use crypto if you have it, to buy a home and that process. So yeah, let me share my screen. All right, you guys can see that?
Yep.
All right, so basically I want to go over 3 options of how it's kind of being done right now, and more might come up in the future. But basically there's 3 ways to use crypto. The first, which is most common, is just taking your crypto and converting it to cash. There's companies like BitPay that basically give you cash for the crypto that you can use for a down payment or an all cash purchase if you have that much. Just keep in mind that you will have to pay capital gains tax when you take that crypto and convert it over to cash, which in general is about 15%, but I mean, it varies depending on your income. The only way to really get around that is if you are a citizen of another country. There's different rules in different countries that charge a lot less when you take out money that way. But that is the most common. One newer way that 2 companies that I know of is that you can borrow against crypto. So you can still hold on to your crypto in your wallet. And there's companies, 2 that I know of are Nexo and Milo. They basically leverage your crypto as collateral to get a loan. The biggest problem with this right now that I see is most of the interest rates are about 8% to do this. So they're much higher interest rates than you would get with a traditional mortgage, but they're called crypto mortgages. And the third way is transferring crypto directly to the seller. This doesn't happen that much because obviously you need a seller that will accept crypto, but there are more and more that are coming out. It allows for a much faster transaction as well. Just like, when you pay all cash, it's going to be faster than going through like loan contingencies and things like that. Definitely a lot that I've read is consult a legal professional if you go this route, because crypto wallets, they're not regulated and you have to protect yourself in the case in that, maybe you transfer crypto and the seller says, "Oh, I didn't get it," or something like that. But there's a lot more legal documents that you'll have to go through when doing that. But yeah, there's definitely ways if you're having crypto to use it in a home purchase. On another note, if you're an investor, I know some investors that are using their crypto to buy in economic opportunity zones, because then basically you can avoid that capital gains tax. If you hold the property for 10 years or more, you won't have to pay any tax on the crypto that you use to buy an investment property like that in an economic opportunity zone. So that's basically it. If anyone has any questions about crypto and things, feel free to send me a message. There's my email and phone. And yeah, that's it.
Yeah, feel free to put it in the chat as well. And Marty and Carlos, if you guys don't mind putting your info in the chat as well, that would be very helpful. And we'll make sure on our YouTube video, everybody's tagged and info is posted on there as well, so people can see that later. All right, thanks, Brian.
Yep.
Let's move on now. So say, okay, finally, we know we have enough crypto, enough money, whatever it is, to purchase a property. Now, the great thing is we get to go shopping for a home. So, what does that look like? Where do we go to shop? I just want to, recommend everyone to be open-minded as far as areas. Because areas are changing all the time. There's new restaurants and shopping and all kinds of things that are happening. School districts are getting better. So explore different areas, go at night, have dinner, go to whatever type of grocery stores you would go to and see what type of areas are out there. There's still limited inventory, and it's been like that for years, and we don't expect that to change anytime soon. So, people are finding still homes that they love, but they may have to go outside of that number one area that they were really, really hoping for. So explore some other areas, take a little time to do that. Some areas that I still think are, possibly underpriced and may have room to keep growing. Some of the areas in the South Bay, I think, North Hollywood, different parts of North Hollywood, certain parts of the valley, definitely a lot of the areas in East LA have come up quite a bit and still have some room to. Some areas that are along the 10, basically all of the just areas that are touching the main central parts of LA that you would think of. And your realtor is going to be the one who's really going to help you discover what areas may be best for you. As far as how to search for homes, we recommend as realtors to search through HomeSnap. Have your realtor send you their HomeSnap link, because if you just go to homesnap.com, you're not going to get all the info. If you go to homesnap.com through your realtor's link, you're going to get direct MLS info, and it'll be updated at a much timelier rate, and you're going to see all the different updates. A lot of the other popular sites that are out there have a lot of issues with open house times, with, maybe there was an open house and they canceled it and it doesn't show canceled on the site. They're not as accurate. So I would highly recommend asking your realtor to send you their HomeSnap link. Use that as an app. It's super easy to search. You can set up save searches. Your realtor can talk to you through that. It's just definitely the best way to go. So I would highly recommend that. Let's see. Just wanted to touch briefly about owning a home versus a condo. A lot of times people say, I don't want a condo, I don't want a condo, I don't want to waste money paying HOA dues. Well, it's not always just a waste of money. A big chunk of your HOA dues are going towards insurance, which you're going to have to pay when you own a home anyway. Another chunk of it is going towards maintaining the building, right? So it's basically like going towards a savings account to maintain the building. When you own a home, you might not have to pay, that $400 every month for your HOA dues, but at some point you're going to have a $4,000 roof repair bill, or you're going to have a $5,000 sewer repair bill, or other things that come up. When you own a condo, you're not paying that full roof repair, you're not paying for that full sewer, you're sharing that cost with everybody else who's part of your building. So think of the HOA dues as basically like a forced savings account. I mean, if you want to have a strict budget and always know what you're going to be paying for a long period of time, condos help you with that. When you have a house, you always have to keep, putting in a separate account some type of savings in case something was to happen with your home, so that you are prepared to fix that if something was to happen. So condos are always not bad, a lot less maintenance. Yep, you have neighbors all around you, above you, below you sometimes. Houses, you don't. You have your own yard. They're very different beasts, right? But I would just wanted to clear the myth of that HOA dues are always a waste of money. They're always, I don't think that they are. So there's other reasons why a house or a condo may be better for you, but that's also something to explore when you get to go out there and go shopping and think about where you're going to be able to move into. The market's super busy right now. There are multiple offers on many properties, especially on entry-level properties. It's not quite as bad as it was like last summer. Summer 2021 was really, really hot. Now we're already getting into almost spring of 2022. It's not quite as busy. We'll see how the year progresses, but strategies for getting your offers accepted are going to be something you have to make sure you have a highly, highly qualified agent who's going to help you to do that. There are a lot of strategies that we can discuss with you that we don't want to just put out there for everyone to do, that we use at the collective to get your offer accepted. So make sure you find the right agent when you're trying to do that. And I guarantee you, it's not always about the price, and it's not always about a cash offer. You know, many other offers are getting accepted all the time. So don't get your hopes up if you hear some of these horror stories that we all hear. It's not always true. So once you get, you find your house, you get your offer accepted, the first thing that the seller is going to want to see from you is some type of good faith deposit. And typically 3% cash is usually going to need to be available within those first 3 days of entering escrow. So we call it entering escrow once your offer gets accepted. Escrow is like a middleman who's going to hold your money and hold all the contracts and everything in the middle, and they're going to be the ones that will work with the title company and the lender at the end to transfer everything, to make sure everything happens the way that it should. So those first 3 days, you're going to need to wire in a 3% deposit. That's your good faith deposit. That's going to be in escrow. They're going to hold it, and it will be there throughout the transaction, and it'll be credited towards your deposit at the end. Or if you're a vet and you have 0% down loan, then and there's any money to be refunded, you'll be refunded any type of excess. So what will happen next is there's different contingencies that your realtor will talk to you about. First one we'll talk about is your inspection contingency. Typically, it's in this type of market, I would count on having about a week to do any inspections that you want at the most. So, typically we'll have a general inspector go out there and they're going to look at the property. Maybe it costs about $450 to have them go out there. They're going to look generally at the property, at the main systems, a little bit at the plumbing, electric, a little bit at the roof, foundation a little bit. They're going to give you just a general idea of kind of what condition the property is in. And then they might point out some other details that they see. From that point on, the inspector may recommend, the chimney may have a crack. You might want to call a chimney inspector to look at that. Or the plumbing is not in good condition. You need to get an estimate to find out what it takes to replace the plumbing. Or, it looks like the roof is old. I didn't go up there and quite see it, but you should probably have a roofer go out. Or I saw termite damage outside. You definitely need to have a termite inspector go out and take a look. So they'll help you gauge what type of other inspections you should do. And your realtor, even more importantly, is going to be the one who's going to say, hire this person, hire that person, do this inspection. The general inspector brought up this. Do you think we should also maybe do this? They'll look at the whole scope of things and let you know what, in their opinion and through their experience, are serious issues and other things that are not serious issues. Because your general inspector is going to give you a book of items that are just not perfect about the house, and every condo has it. So, don't be too scared or turned off by that book. Let your realtor go through that with you and help discover which items are most important. What are the biggest safety issues from that? And through that opportunity, you'll be able to go back to the seller and say, you know what, the foundation has a crack. We discovered it's a $100,000 issue. We had no idea moving into this. It's not something that we're comfortable moving forward with. We would like the price reduced to $100,000, or we would like a credit of $50,000. Whatever. You can strategize on how to negotiate that, and then it's up to the seller. They can say, okay, it's fair. Everybody else is going to ask us for the same credit. We'll give you 3/4 of it. And then you can go back and say yes or no. So it's an ongoing negotiation at that point. And as long as you have that inspection contingency that you haven't, signed off on to remove it, and like I said, it's usually about a week or a little longer possibly. If you don't come to an agreement on how to remedy the foundation or how to remedy these issues that popped up that are not acceptable to you, you have the right to back out of the deal and get your initial 3% deposit returned to you. So there's really, I like to tell people, pretty much no risk writing an offer and getting into escrow. We can discover things once we're in escrow. The risk that you have is you're paying that inspector the $450, so you're not going to get that back. But it's absolutely worth it to have, you know, that $450 as an insurance to find out what type of property am I buying. And if there are things that come up, back right out, go into another one. So, you know, I always say too, you know, if you're like 70% sure you like this house, but you're not 100% sure yet, maybe let's write an offer. Let's get in, let's do an inspection. Let's spend a little time there in the house and then decide. And maybe you spent a couple hours with the inspector and you're like, I just don't like the street, or you hear that the neighbor has roosters and that bothers you, or who knows what you'll discover at that inspection. You may want to cancel the escrow and move on, and you have the right to do that. Other inspections that are out there are your appraisal contingency and your loan contingency. So you have, you know, typically 17 days is what's in our contract to get your loan approved. And in this competitive market, sometimes they want it to be shorter. And if for whatever reason within that contingency period you have, the lender says, oh, your credit score changed, we can't give you this rate, or I just lost my job, or something happens where you can't get qualified for the loan, you're able to back out and get your deposit back. Sometimes we hear that the lenders, you know, are able to help you out if you turn in all the documents that they request early, and possibly write an offer where you don't have to write a loan contingency. So it makes it seem to the seller like there's no chance they could back out because of the loan. Now this offer is as good as a cash offer because I don't have that risk of that contingency of the buyer walking away from the deal in 2 weeks because something happens with their loan. They don't even have a loan contingency. So it's something that Carlos and Marty can work with you on to decide, is this something we want to do or not? Or maybe they say, well, we need about a week, or, you know, we're not sure about the appraisal yet. Let's keep that one in there. It's going to be a strategy that you work on with the lender and your realtor. So, I mean, Marty and Carlos, anything you want to add about both of those points and the appraisal? You know, I mean, what should people be aware of the appraisal? Like, what does the appraisal mean? You know, so many people are writing offers right now over asking price. Should a buyer be concerned about overpaying for a property?
If you want me to take that, I can.
Yeah.
So one of the strategies that I recommend for every buyer in this market, especially in Los Angeles, is to get fully approved, not pre-approved. So what that would entail is, you know, when you get us your documentation as a borrower, we as loan officers review the documentation and tell you, yeah, you're good to go, or yeah, we need to work on this. But there's another step. Once it goes after me or after Carlos, it goes to an underwriter, which basically has the capacity to bind that loan to the company. With that said, once it goes to that underwriter's hands, that means that you've reviewed it, they've signed that dotted line, and they've approved your loan. You know, that means that you've got your approval. So when you go to write your offer, you don't have to worry about getting declined and or not getting approved for that loan. So it makes your offer a lot stronger when you get approved, or you can reduce your contingency periods or not have any loan contingencies, which we'll advise you on, and along with maybe even reducing your terms. So sometimes what I tell the clients is you don't have to always be the highest dollar amount on the offers, but you could be better terms, and you could always maybe beat out the other offers because your terms are better. Like the seller might be interested in closing in 20 days versus 30 days, which you can if you're fully approved. So things of that nature is what what we advise you on, and we'll let you know about the how to write those offers, obviously along with your realtor. Do you want to take the appraisal piece, Carlos?
Sure. And just so you know, so in probably 95% of the cases, an appraisal is going to be needed anytime you have financing. And what this does is it helps protect not only you, but the lender to ensure that the price of the property that you're paying meets the value of the property. Now, one thing to consider and is highly important is that value is very subjective, right? You as the new purchaser of the property are setting the new purchase price, but you have comparable sales analysis that have to be done, and appraisers are certified and licensed to make appraisals. So there are times where those your purchase price may not meet what the value of the property is based off what the appraiser's advice is. In those cases, Anthony and his team can help you with maybe a renegotiation of that sales price, or you can go ahead and pay in cash for whatever the difference is between the appraisal and the sales price. But again, at least this gives you an actual valid report. It's made up of, I believe, 30 to 40 pages worth of documentation that have been validated by the appraiser to ensure that the value is set correctly.
Yeah, no, that's great. So don't worry about overpaying, right? Because the bank has to say, yes, it's worth this as well. And if you do overpay, you might be able to renegotiate. So don't stress too much about that. You are going to be protected. That's our job as a realtor, is to protect your wealth. We don't want you to overpay for an investment. So Carlos, Marty, thank you guys so much. Yale, Brian, thank you. We'll have time for some questions if anybody has any questions, but I know that buying a home can seem overwhelming, and just rest assured that we're here to help you step by step to get on that path. And you've already taken that first step by listening to what it takes to get started in purchasing a home by listening to our seminar today. Your agent will be with you, guiding you. We have a great team around. All of our agents we're like a family here, and part of our mission is to treat you as you're our family as well. You'll have amazing lenders that you're going to be working with, and you will absolutely be taken care of. So know that you have a lot of people that will be caring about you.
Can we just say one thing about you? You're amazing, and your team is amazing as well too. Not just us, but really, honestly, just the admiration I have for what you do is beyond. So absolutely, everybody on this call, I mean, the office of the collective, they did just literally mind blowing how good they are.
Thank you, Marty. Another reminder, this session is recorded. It'll be on YouTube tomorrow. Just search The Collective Realty. We have some of our past sessions on there as well that we did home buyer seminars. And like I said, credit and so many other things. So thank you for attending. If you have questions, we're here to hang out and answer anything that you guys may have. And enjoy the warm weather, I guess, while you can. And have a great weekend. Happy Valentine's Day.
Thank you, everyone.